Good afternoon, everyone. This is Corey Hinkle, and I'll be your host today for the Ankerstar Wealth Daily Update. Pretty big day with a few exciting topics. The market is actually green on the year. Well, the S&P 500 is. We've got some trade announcements for today, and then we've also got a very prominent digital asset company that will be joining the S&P 500. So I'm excited to share that. But before I get started, I want to remind everyone that this is a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and mine alone. All right, let me share out here. It's just quite a sight to see. The market is putting out another large green, what they call candle today, and finishing the day pretty strong. So every day it seems and becomes more clear that a V-shaped recovery is likely what we're going to see take place over however many couple days or weeks it takes us to get back to those new all-time highs. I do have some uncertainty around what happens when we get to those all-time highs. How much energy did we use to get there? I know there's trillions of dollars still sitting in money market accounts that could turn into fuel for the market to rally even higher. But we'll see when we get there. You know, carrying on, look down at that bottom paragraph there. So Tuesday's gain put the S&P 500 up 0.2% for 2025. At one point, the S&P 500 was down more than 17% for the year. Pretty dramatic. And if you look from peak to trough, we actually touched a little bit more than a 20% drawdown from peak to trough. So I wanted to take a moment to kind of look at this. This is some 1 month returns, and it's obviously clear now that any assets that we were able to acquire in your individual accounts, and I did have some clients reach out, hey, let's get this Roth contribution done, take advantage of this, or hey, let's put that little cash buffer that we had to work. So all of those assets that we acquired have benefited nicely off of those lows. You know, just singling a couple out, there's a few of these names in here in the S&P 500 that have actually moved up 100% from the April 7th lows. So pretty dramatic. And again, that's what I was alluding to with, okay, now what, right? Now what? Here's, and I want to highlight something that we talked about last month on the show, sometime in mid-April. We had some clients and even ourselves, right? You know, you're looking at your account, there's a lot of uncertainty. The news was frankly quite scary at times, some of the headlines and things, and people are thinking, you know, I want to sell out or I want to reduce risk. Now that we're on the other side of this, hopefully you were taking that opportunity to add assets to your portfolio. But now that we're on the other side of it, I just want to reiterate that the market doesn't wait. If you really look at the current environment right now, how many trade deals have been signed in stone, right? How many things are done across the finish line? Maybe one. But the markets are just a few percent away from all-time highs. So you can see that on the left side there, you've got the market typically is going to bottom about a year before earnings bottom for companies. And on the right side there, you've got GDP. The market is going to bottom at least typically a full quarter before GDP bottoms. And we did have that negative GDP print for Q1. The market's not going to wait. We don't have that luxury. Remember, if there's some market volatility, some drama, some stress, and you're thinking, I want to sell out, I want to go to cash, you must, at that moment, you at least have to accept and recognize that you need things to get worse from that moment. So that should be part of that conversation with yourself and obviously with us is, do you feel confident that things are going to get materially worse from where they are right now? And I remember there was a headline put out on like April 7th that was comparing the market to the Great Depression. And it's like, you look at unemployment and it was still 4%. And you look at some other metrics and it's obviously not the Great Depression at that moment. Could it have come? Could that have materialized? It's possible. Anything's possible. But if you're going to make that decision, you have to front run yourself with that question of, do I really truly believe things are going to get materially worse? Because if I'm going to sell out, it's because I'm selling out before things get worse. Because I know the market is going to bottom way before the news bottoms. The market's going to bottom long before the actual numbers and metrics bottom. So, am I going to sell out and then the market bottom while news is still bad and uncertain? I mean, again, we've signed maybe one deal and the market has clearly put in at least a near-term bottom. So market participants, we don't have that luxury to wait for the dust to settle. It's just not what we get in the stock market. All right, going on to that trade deal announced. The White House announces $600 billion Saudi investment in the United States. You can see there's actually a little bit of a two-way street on this. NVIDIA is sending 18,000 of its top AI chips to Saudi Arabia, which I don't even want to try to do the revenue number on that in my head. Those chips are very expensive. And Elon Musk says Starlink was approved in Saudi Arabia as part of this. There were a few other companies mentioned or intending. This was like an investment conference there. Obviously, President Trump spoke as well. So very good news. And we've kind of seen the big one. The big one was China. And do we have a trade deal established with China? We do not. But we know that the negotiations are there. And we know, as we said, the market doesn't really care about what happened yesterday. The market doesn't really care what's happening today. The market's looking 6, 9, 12 months out in the future. And the market has taken all of the available information, and it has decided to price in that a trade deal with China is done. It's good. It's baked in the cake, right? We'll see how that materializes. If something negative were to occur, that would be new information for the market to price in. But the market is looking ahead and feeling very positive about these trade developments. Okay, now on to that digital asset news. So we have many clients who participate in holding and investing in digital assets, Bitcoin, altcoins, and even more in the space. Some companies just involved in the digital asset space. And one of them is going to be joining the SP 500. That is Coinbase. Coinbase is a highly profitable trading platform. They are really a one-stop shop and kind of the only game in town for common folks to go and trade cryptocurrencies that you can't find on some of those larger brokerages, such as a Schwab or a Fidelity or a Vanguard, right? They're not available, so people are forced to go to Coinbase. Coinbase is highly profitable, successful. And if you're thinking, oh, okay, this is exciting, man, maybe we should buy Coinbase. Coinbase was up 24% today on this news, and it was already a richly valued stock. So, we miss that boat? I mean, the future is long, and if you believe in the long-term story, we could talk about that. Reach out to us. But as far as today goes, the stock benefited greatly already. So I think that might be all I have for you today. Thanks for hanging out with us today. If you have any questions, you could throw them in the comments down there. Reach out to us. Until next time, we'll be watching for that V-shaped recovery that's been unfolding day by day. All right. Thanks for hanging out. Have a good one.